Good morning, traders. Welcome to the weekend update here on Sunday, January 28th. So, looking at our current open positions, everything is looking good and profitable at this point. Not hugely profitable, these broken wing butterflies, particularly when they're put on in a lower IV environment that we have had currently. They're a little less profitable during those time frames. So we're seeing that here. We're seeing that this position's only up about 3%. Now, that should be able to creep higher as we get closer to expiration if the market stays up here. So the game plan here will be to roll that wing up a little bit more here on this side. Let me turn on my drawing tools real quick and kind of share that. So, we're looking at raising this wing a little bit here. At the same time, we would raise this wing a little bit just to kind of keep our risk under control in a big downside move. Same holds true here. We got a little better start or a little better bite on this one, if you will, because I believe, if I remember correctly, volatility was a little higher at the time we put that on. Then this one, again, this one doesn't expire until out here on 3/1, but we'll go through the same process on this one, adding again rolling up the wings. Now, another thing that could be done on any of these is to also sell a call spread somewhere where we don't think the market will go. That will boost this entire area up a little bit, giving it a little juice. The problem you can run into is if our market does take off and rip to the upside, this profitable trade can go into a loss trade. So I want to be kind of careful here with those potential upside moves. Of course, this trade is a different configuration. It is at a totally different risk amount as well, as we can see. But it has to be put on in a ratio. The butterfly with a long call needs to be put on in a certain ratio where that butterfly structure here and our long call aren't too far apart. And if I tried to do this in a smaller size, if I tried to do this in a 2-lot, a 5-lot, etc., that long call would be so far out here that when we start to get some decay, this line is going to dip way too deep here and represent way too much of a risk to the overall trade. So we also have an order setting out there right now to take one of these butterflies off. As soon as that fills, I'll put another one out there. It's a GTC order to take yet another butterfly off. As we're doing that, it's locking in a little bit of profit, reducing our risk a little bit, and it's also going to help this line out to the side here maintain its integrity in an up move. So look for that in the coming days. And then let's talk about the current market itself. So I'm going to look specifically at the SPY here right now because we have some volume. SPX, because it's options, doesn't really show the volume side of the equation. So what we're seeing here is a little bit of a reduction in volume. And that is to make sense. We got nice volume boost right here on the breakout. In other words, as soon as you get a breakout, everybody comes in. Ooh, I don't want to miss this. People get FOMO and they start buying. And then when that breakout sort of flatlines, if you will, things get sort of quiet. So we saw here on Friday just a little bit of pickup in volume as the market sold off slightly. And that's people getting a little bit nervous. Is this overrun? Has the market run past where it should maybe be at this point? So that's kind of what we're looking for, is some changes in that volume combined with, of course, where the market's at the time. So my expectation, as I mentioned to you, was that we would come up and break out, which we did, and then after a breakout, we would run a little bit, probably flatline a little bit. My expectation is that we will probably get a pullback right down into the 480 range, this line right here. That's 4,800, of course, on the SPX. that we might chop around there a little bit, and then most likely off to the races again, unless, of course, some economic or political event kind of freaks traders out. But under normal, I guess I would say under normal technical analysis, there's no reason to think that this general uptrend is not going to remain in place. The market would pull back about to that uptrend line, and then again chop sideways maybe a little bit, and then probably take off again. So what I'm looking for is I'm looking for that pullback right into this area, because when that happens, I would expect the volatility would likely increase a little bit. And again, if we get that pullback and volatility increases, that's a great time to put on another butterfly trade of some type. And we'd model out some different trades to see what I felt was maybe a good one to put on at that point. Those of you that haven't taken the deep dive butterfly class, I'll put a link up there for you to check it out, and we get into all this in the butterfly class, when it's better to put them on, why it's better to put them on in a downdraft or when volatility spikes, how they're much more affordable, the reward to risk ratio is significantly better in them, and then how, all of the different adjustment or management techniques there are. I spend well over an hour in what happens in a big down move, how do you adjust, spend over about an hour on up move adjustments. So a lot in there for those of you that haven't looked at that class before. So with that, let me just also pull up SPX here. Of course, it's going to look essentially the same. Just the numbers are 10x. So everything is the same here in SPX. Let's just take a quick look at RUT. And if we take a look at RUT, we notice that RUT is a little bit weaker. So RUT is coming up. It's not recapturing its new highs. It is stalled right here a little bit, which again, I would expect. We did break this uptrend line. So this uptrend line was in place. And what's interesting to note here is we chopped sideways through that line. After we chopped sideways through that line, we kind of broke down a little bit to a former area of what I would call resistance and support. Now we've bounced off that, and we've come back up into a resistance area right here. And also, it's the back side of this uptrend line. That's, so everything kind of converged here. We had a little convergence of this horizontal line here, and then also this uptrend line, and everything converged in that one area, kind of telling us that, yeah, there's going to be a little stall here. Now, we'll have to see where things go from here. My expectations in the RUT is really to kind of stay in a channel for the time being. Probably, that's not a very straight line, probably somewhere in this general range of the 2025 to 1900 range. That would be kind of my expectation on RUT. And if we come back and look at that plays perfectly. 1900 to 2025, that kind of plays perfectly into the premise of this trade. So we'll have to, of course, see how that plays out and if something changes differently on that. But that's kind of where we're looking at for the RUT at this point. So that's the wrap up here for January 28th. As always, please give me any comments, questions, etc. And thanks everyone for tuning in, and we will see you here this next week. Take care.